Good evening, trader. This is Daud from Elliott Wave forecast.com. Welcome to video of the day. Today we're going to take a look at the price action in dollar yen starting from this low here that we saw on 16th of January around 115.82. And we believe that the dollar yen is going to do a WXY structure up from this low here. That's what our preferred analysis is telling us. Okay, the first move up here, it was a WXY structure in itself. W, X, and Y. It stopped at the equal legs. All right, a perfect test of the equal legs there around 118.84, and then we got this 50% pullback, as you can see. Okay, so this was a 50% test of the W here, and prices now started trading higher again. Okay, so currently we see three waves up from the yesterday's low around 117.09. You can see we have labeled it W, X, and then this W of high degree, which we think is completing a blue W. However, we do want to make it clear that if the price keeps trading higher here, then the next area of interest is going to be 119.02 to 119.46. Which is basically the 0.618 to the 0.764 extension of this W related to this X connector over here, and that's a typical area where your fifth swing, or in other words, wave W of Y would typically end. As this chart is showing, it is still showing it to be ending in that area. Now there is two ways that we could get to that area. We can see an intraday pullback here, or perhaps in the Asian session, and then make this push up into this area to complete W, and then make a pullback in a wave X, come back down, test the trend line, and then start trading higher toward this equal legs area, which is at 120.18. In extension, we can see a test of 120.90. All right, so this is what we like in the dollar yen. We like more upside in the dollar yen against this low in the first degree, which is at 117.15, the low that we saw yesterday. And if this low breaks, all right, then of course we still like to buy the dips against this low in the second degree. We do not recommend selling the pair into these proposed pullbacks here, as they are represented by dotted lines clearly showing that these are counter trend pullbacks, and you should not be looking to sell into them. And the arrow here is telling you that you should only be looking to buy the dips in this chart. All right, of course, and with the instructions here that you should trade with alignment of arrows in two time frames. All right, in direction of arrows, red, green, and solid lines. Don't trade in the direction of dotted lines, and buy or sell in 3, 7, or 11 swings. That's all we do at Elliott Wave Forecast. We identify the ruling cycle, and then as far as the pivot in the ruling cycle is holding, all we do is buy or the dips in 3, 7, or 11 swings, or sell the rallies in 3, 7, or 11 swings until the pivot gives up, the cycle changes, or sometimes the pivot can give up in 1 degree, and then we start buying the dips or selling the rallies in the higher degree. All right, so what do we like in this dollar yen chart here? We like to buy this pullback in 3, 7, or 11 swings. So for example, if you pull back from here, it could take us down to 117.91, 117.73 area, from where we would like to trade the long side initially into this box, another pullback, and then eventually higher toward 120.18, 120.90, where it should end this cycle and then make a larger three-way pullback to correct this entire cycle. All right, and in the unlikely event we do not break this high and then break below this low over here, then the next area to buy the pair would be this one, which is going to start from 116.92 to 116.51 against this low, still looking for equal legs of this W, and then this will become your X and higher again. But this you play this box only if the low gives up or the pivot here gives up in our system. But when we get the pullback initially, of course we would like to buy the dip in 3, 7, or 11 swings as far as this pivot is holding, and against this low, if this pivot breaks, then we'll be looking to buy this area against this low, still looking at equal legs of this W projected higher from this area. All right, and like I said, now we could get a pullback from this area where we are right now, because we are ending three waves from here at the 1.236 extension. But of course it can extend a little bit and go to the 0.618 extension of this red WX, in which case it can become the W of high degree here. All right, and even then we would still expect a pullback before we hit the equal legs area there, and when we get the pullback, we like to buy that in 3, 7, or 11 swings against this pivot in the first degree. And if this pivot breaks, then we still like to buy equal legs down from here in the second degree as far as this pivot keeps on holding in our system. So that's what we like in dollar yen, and when it reaches that area, it should end the cycle from this low and then make a larger three-way pullback as indicated here. But of course, we would not recommend selling into that. We're only looking to buy the dips in the dollar yen in 3.7 or 11 swings against this low in the short term in the first degree, and then against this pivot in the second degree. Okay, and that's the video. I hope you enjoyed it. Thank you for watching, and for further updates and to see our midterm and long-term view in this pair, other yen pairs, the dollar pairs, indices, commodities. We invite you to take a 14-day trial of our services and check out the new instruments also that we have added in the Plus plan. All right, take care. Have a great evening, and for all your forecasting needs, remember www.elliottwave-forecast.com.